Okay. Good morning, everyone. Very good morning. So, welcome everyone to a fresh new day. Good morning to all of you, right? Yes. Thank you everyone for connecting. And very good morning. Happy Thursday. Good morning, sir. Very good morning. Thank you. Thank you, everyone. So, whoever are in the live session and all the members who are joining now, a wonderful morning to each and every one of you. So let us start with our daily finance practice with the affirmations. We will learn and then we will observe the market. Okay. So let me share my screen and let's do the affirmations together. And you can repeat these affirmations along with me. I enjoy the challenge of making money, saving money, and living a prosperous life. I am dedicated to becoming an amazing investor. My mind is a powerful magnet for profitable ideas. I earn passive income to lead my desired lifestyle. I make sure to always take calculated risks. I will avoid noise and distractions and focus on goal. I work to live, not live to work. I am a lifelong learner. I deserve to be wealthy and successful. I accept financial freedom for myself and my family. Now let's do the affirmations for money. I'm an excellent money manager. I always pay myself first. I put money into my financial freedom fund every day. My money works hard for me and makes me more and more money. I earn enough passive income to pay for my desired lifestyle. I work because I choose to, not because I have to. My part-time business is managing and investing my money. Affirmations for passive income. I create my life. I create the exact amount of my financial success. I play the money game to win. I admire and model rich and successful people. I believe money is important and money is freedom. I get rich doing what I love. I am truly grateful for all the money I have now. My capacity to earn, hold, and grow money expands day by day. Yes. So we do these affirmations every day in order to ensure we are in the right kind of a mindset. And whoever do not have a copy of these affirmations which we have discussed, you can download it, you can print it and make a copy of it, right? All these affirmations are already available in your learning portal, right? So if any one of you are completely new into this community, you just need to log in to our learning portal, right? To our LMS, Learning Management System. And once you log into our LMS, we have both the website and the mobile application. So this is how your courses will look. Go to the first module, and in the first module, below the introductory video, right? This is your introduction video. Below the introductory video, under description, you have all your important links. And we have a goal card video as well. Every one of you prepare your monthly goal card. And below your monthly goal card, under description, affirmations are there, right? Just click on it. You'll have a PDF version of it and you can download it into your laptop, right? Download it to your laptop. I would highly recommend take a printout of it and have the physical copy. And if possible, go and laminate it. It hardly takes 15 or 20 bucks. Okay. In your goal card video, below that under description, you will have it. And also, yes, on the third part, complete your quiz go through the Partner Academy, and all the investing and trading related books are also available here, right? I hope every one of you bought this. Now, let us start with the learning part, right? Let us start with the learning part. So today, we will learn about stage analysis, right? So I've repeated this multiple times in our live sessions, even in the courses also you'll be finding the same. So every stock, every index or sector which you analyze will basically have four important stages. Identification of that stage is very, very important. And which stage you should ride more, which stage you should avoid is also very important, right? So what we will do, we will learn about this different stages, and also I'll show you with 30 EMA, and also I will discuss with you with some practical live stocks and sectors examples also. Nothing we discuss today should be taken as a recommendation of a buy or a sell like that. Rather use that as a case study. Use that as an example, right? Use that as an example, right? So stage analysis, to quickly cover, we have broadly four stages, right? These are the four stages we have: neglect phase, advancing phase, topping phase, and declining phase, right? Neglect phase is one, we call it as stage one, which is where the stock consolidates, very early phase, pioneering phase, right? Very, very early start of the company. Advancing is the accumulation phase, where the big corporates or big hands like DII or FII will accumulate, right? Domestic institutional investors and foreign institutional investors will be accumulating, right? Big hands entering. And this second stage, advancing, is where we would love to be in. Distribution is something where institutions are heading for exit, right? Stage 3 is an early sign of exit. And stage 4 is the declining phase, which is where the stock or a sector goes into bearish zone, which declines. We also call it as capitulation phase, right? Or stage 4. And why we should avoid declining phase is, if you are losing 10% in a stock, it is okay, you can recover. Even if you are losing 20% in a stock, you can recover. But if the loss increases and you lose more, the game will go against you, because higher the losses, higher the amount of profit you need to recover your money. For example, if you see this grid, right? Sir, yes, I've lost 10% in a stock. It's okay. Once you are in positive by 11%, you will get into break even, right? So percentage gain needed to get back to even, which means just to come to the same equilibrium, you need 11%. If you have lost 20% in a stock, you need 25% gain just to come to level 0. But look at how the math goes against you if your losses are increasing. Let's say you have lost 50% in a stock. You did not keep a stop loss. You did not have an exit criteria. You lost 50% in a stock. Even if the stock moves 100%, you will just break even, right? Percentage gain needed to get back to even. That's why never ever wait for the stock to decline continuously in a lower stage. And that's why it's pathetic to average down, because the game goes against you, right? The game goes against you. Never ever average down. If you want, take a pick of this and stick it somewhere, right? Stick it somewhere. So you will understand, whenever you want to average down, or whenever you wanted to hold your stock more, you should remember this. I've lost 20% in a stock, and if you are not exiting, if it further goes to 40% loss, 66% is the profit you need just to get into break even, right? So don't do that mistake. Now what we will do, we will learn this concept, right, with a example, right? With an example. So what I will do, every one of you are aware about exponential moving average indicator, EMA, right? And how you can load on a weekly time frame also, I'm sure every one of you are aware, right? So let's say this is a stock, right? A random example. We'll take a couple of live examples also, but let's say try to understand the concept. This is a stock, and whatever you are seeing, the zigzag movement is the variation of the stock, price increasing, decreasing, right? This is how the stock has been moving. On top of the stock, I will load EMA indicator, right? This is your exponential moving average indicator. And whoever are not aware of it, exponential moving average means it takes the moving average of all the closing prices of the stock. And as we are looking on a weekly time frame, right? Weekly, you change the setting to 30 weeks. So this line is your 30-week EMA, right? Is your 30-week EMA. So this is your EMA line, and the starting when the stock is on the EMA line, that is your stage 1, right? Which we learned just now is the basing phase or the initial phase or the pioneering phase, any phase you can call it. Stage 2 is where when the stock moves above your 30 EMA. Many people ask me, sir, how to identify whether the stock is in stage 2 or stage 4? You can just apply your 30-week EMA on a weekly time frame. And when the stock is moving above your 30-week EMA, has started to move above, this is an early sign that the stock has entered into stage 2, which is the advancing phase. And this is the phase where it starts with a big volume breakout from a base. Let's say here, when it is moving above your 30-week EMA, on top of your on this EMA indicator, when you have your volumes below on your trading view, you get very high volumes during this breakout. That's a wonderful entry, right? Starts with a big volume breakout from a base, price starts trending above a rising 30-week moving average, right? Above 30-week moving average, right? So this is where is the stock is in stage 2, and stage 3 is where the EMA line and the stock is colliding, right? Price chops around a flattening 30-week EMA, right? You will again see a flat. So that's why we call it as a consolidation, right? Consolidation. This is a consolidation phase. And whenever the stock moves below your 30-week EMA, right? As you see, this is your 30-week EMA. And as it moves below it, this is your stage 4 distribution, or we also called as a decline stage, capitulation stage, right? Anything, name is the same. Price starts trending below a declining 30-week moving average. This is where you should avoid, right? And sir, it's a very potential company. I want to enter into it. I'm getting at a very low price. Good for you, but wait till it further again forms a base. It will come into stage 1. And let's say this is your 30-week EMA. If the stock again moves above your 30-week EMA, it starts at stage 2. This is where you can again re-enter. Rather than entering here in the decline, wait for it to pull back. And that's where you need to enter, right? That's where you need to enter. And someone who are like, sir, I have been in the market for more than 3 years, more than 5 years I have been there, sir, right? I know how to adjust my risk, right? When it moves down in the decline phase, this is where you can short sell, right? Short selling is not for everyone. It is only for experienced investors, because this can backfire, right? This can backfire. Short selling means you first sell a stock and again you buy it back at a further lower price. That's how you make money, right? That's how you make money. But if you're a starter, if you're an investor, just focus on stage 2, right? Focus on stage 2. That's why the big money is made during S2 uptrends, and the big money is lost in S4 declines, right? S4 declines. So whenever you're looking at any stock or even a sector, always remember to capture stage 2, because stage 2 is where you get a lot of value, and stage 4 is about losing value, right? Losing value you should avoid. Stage 1 and stage 3 is like time pass, right? You just lose your time. It will neither move up nor down. It is just that your money is stuck there, or you are just waiting for the opportunity. Stage 1 and 3, losing time. Stage 2 is where you gain, and stage 4 is where it is about losing value, right? Losing value. So now what we will do, let's go to trading view, and I'll just apply this on a live example, right? So let's see, I'm in Nifty 50. I've moved to a weekly time frame, right? I've moved to a weekly time frame. And what I will do, I will load EMA, exponential moving average. So I'll go to indicators, technicals, and I'll just type exponential moving average. And now in exponential moving average, I'll hover my mouse, I'll go to settings and change it to 30-week EMA, right? 30-week EMA. So this is the blue line is your EMA, and this is your entire movement of Nifty 50, right? Movement of Nifty 50. So as you see here, from almost May 2023, right? This entire Nifty 50 is in a stage 2, right? See, it has never come below your Nifty 50, below your 30-week EMA, your index. So even if you have been bullish on the entire market from here, it has never triggered an exit. So market has moved from almost 17,800 to almost 26,000 levels it has moved. And this is where decline stage started. And if you see, this entire period is your stage 3. And this is your actual stage 4 when it moved below the EMA 30. And again, we had the stage 2. Right now, that's why we have been saying market is not in a declining mode. Market is not in an advancing mode. Market is in a sideways. See, it is just creating a base. We do not know how long the base will be created. Once from the EMA 30, if it moves above and the EMA line increases, it moves above, this is your advancing phase, right? This is your advancing phase. Okay. For example, I'll take one more stock, maybe like a Syrma SGS, which is into the EMS space, electronic manufacturing services space. So now you tell me, which phase is this, right? Which phase is this? Is it stage 1, 2, 3, or 4, right? Very good. This is stage 2. This is the phase. Which phase is this? Stage 4, right? Again, here if you see, this is a phase like stage 3. And now it is in a clear stage 2, right? Clear stage 2. It's in a trending phase or advancing phase, right? Your Minda Limited, right? Automobile related company. See, it's in a clear stage 2 kind of a phase. TVS Motor Corp, right? You can take multiple examples, right? Polycab. Let's take an example like Polycab India Limited, right? See, Polycab India, clearly in a stage 2, which is the pioneer in wire sand cable. TVS Motor, Hero Motor, any of the automobile, or even see, it's in a clear stage 2. Look at the entire automobile sector, Nifty Automobile. Nifty Automobile is actually in a stage 2 and at a very good breakout as well, right? Very good breakout, almost like close to 1 year, 15 months kind of a breakout, right? So the 30-week EMA itself will resolve majority of your queries, right? So your homework or your assignment or your task for the day is look at various stocks or even indices. You can apply the same in silver or gold also, right? For example, silver, right? Just go to your chart, keep the 30-week EMA, and just load silver Bs or gold Bs. You tell me in the chat box, when did silver go into stage 4? Type in the chat box, right? When did silver go into stage 4? Or when was silver in stage 4? Type in the chat box, right? Type in the chat. Never, exactly, right? You have seen a few candles just touching the EMA 30, but it has never been, right? Never been, not yet. It is in stage 2. That's why silver or even gold, we have been discussing from almost a couple of years back as a part of assets diversification. And you can be in this as long as it is above your EMA 30, right? How many of you are mind blown? Type it as MB in the chat box, mind blowing, right? So this is on the stage analysis for the long term stocks. Yes, you can apply your EMA 30. Okay, so today's homework, analyze 3 stocks or 3 sectors or indices, whatever, and check what are your watch list of stocks which are in a clear stage 2. And on top of it, right, like on a cake, you add more puddings, right, ingredients. When you get a stock which is in uptrend or stage 2, and the stock is also coming out with great volumes, right? Sir, I see some heavy buying is happening in this stock, right? So those kind of stocks are more stronger. I repeat, sir, the stock is in stage 2 and even the volumes every day are increasing. The green bars are increasing. Heavy buying is happening, which means DII or FII are entering. That volume bars itself will tell you. That is a more confirmation of strength, right? More confirmation of strength. Sir, if I'm following on a weekly, I look at EMA 30. What should I do on a daily time frame? On a daily, follow EMA 21, right? EMA 21. So ideally, to get the exact stage of a stock, right? Exact positioning of a company, preferably follow weekly time frame, right? To at least assess which stage the stock is in. Daily is too short time, right? 21 days is too short time to assess because multiple events can trigger, right? Ideally follow weekly, but sir, I want to assess the short term uh, stage. Load your EMA 21. If it is above your EMA 21, yes, stage 2, below stage 4, but ideally follow weekly. Okay. Good. Now, intraday, below daily time frame, observing the stage analysis, it does not make sense, right? It will give you distorted results, right? Distorted. Ideally, is weekly. Max, you can go for a daily time frame, right? Daily itself, you can use it for your intraday also to assess whether the stock is stronger or not. Okay. So today, 3 stocks is what you have to do your homework. Okay. Good. So now let me activate attendance link. So you can go to your feed in your mobile and just submit your attendance, right? Submit your attendance. So open up your mobile application or the website version, and next to your courses on the left, you will have a feed option, right? You will have a feed option. So there you will get a pop-up as attendance. You just need to swipe, right? Just swipe it. You are done with the attendance. Any one of you who are facing problem, I've shared the link in the chat box. You can submit it from there, right? Submit it from there. Now let's quickly go ahead and discuss about the market updates, right? Market updates. Now, first thing, yesterday, the GST committee, right? It's a 2 days event. Yesterday, we have seen some positive moves, and there are segments where we have observed some wonderful rate cuts, right? Wonderful rate cuts. And even today also, it's a 2 days meeting. Today also, we have the meeting. So the 5% and the 8% have been approved, and it's taking a live effect from September 22nd, right? And if we see what are the segments, right, which have got benefited, right? So if you see, these are all the sectors which have got a positive boom, right? Positive boom. So first, if you look at agriculture, right? Agriculture, yes, your tractors, tires, parts, biopesticides, fertilizers, irrigation system, right? Drip irrigation system used for your plantation and all. So from 18 to 5, 12 to 5, so a fixed 5% is done, right? So this will also help your automobile sector also, which is directly linked to the tires, manufacturing of tractors, right? Fertilizers also, fertilizer related companies also will have a positive move, right? Will have a positive move. And apart from that, yesterday we have also seen couple of other sectors also which got benefited, right? Your daily essentials, your FMCG related products also from 18 to 5, 12 to 5, a fixed 5% GST has been implemented, right? Education related, we used to have 12 and 5%, and that has been to nil, 0%. And mainly EMS, right? Electronic Manufacturing Services. Your air conditioners, televisions, monitors and projectors, washing machines from almost 28%, 18% is a very good reduction. And considering that we are in the festive season, right? This will boost the sales. This will help the overall money flow in the market also, right? And that's the reason, if you look at in the EMS space, Syrma SGS, your Keynes Technology, right? Even Dixon, which is also at a very, very good breakout. All these stocks have also picked up very well. And look at the pattern, right? Whoever are like, sir, I don't follow technical analysis. I'm not good on the charts and all that. How many of you are new into technical analysis? Type it as new in the chat box, right? So whoever are there in the live session, how many of you are, sir, I'm completely a newbie, right? I don't know anything about technical analysis, charts. I don't know anything. All of you should learn technical analysis, should understand the charts, spend time on it, attend our live sessions, go through the courses. Because see, the beauty of technical analysis, someone will not come and tell you in advance. But what will come and tell you? The charts will come and tell you. See, how many of you have observed that the actual price and volume started before the GST announcement? Type it as yes in the chat box, right? See the stock, the price and actually Nifty 50 for the last 1-2 weeks has been down, has been flat. But look at this, it has increased, which means someone already aware of the information, maybe insiders or the company officials or someone maybe from the bureaucrats, right? Someone from the government would know that there is something happening, right? See here, Keynes. See, market is in a sideways, but even here also you see very good volume has come in, right? Look at Dixon Technologies, right? Dixon. So see, for the last couple of days or weeks, price and volume charts will tell you much in advance, right? Charts will tell you much in advance. Even whatever we have seen on the tires, tractors, right? Your two-wheelers, four-wheelers, automobiles also, there is some very good automobile is also a beneficiary, right? Automobile is also a beneficiary. That's why automobile sector also has been strong. And even the entire month of August, right? Entire month of August, we have seen Nifty 50 has been weak, but automobile has been a positive index, right? Has been a positive index. So what I'm saying, even though you're a completely new person, newbie, all of you who have mentioned as new, it's okay. Everyone started from scratch. I also started from scratch 15 years back. So learn, allocate some time, allocate some energy, keep following our live sessions, spend some time. This will tell you much in advance before the actual news comes out, right? Actual news comes out, right? So EMS, yes, positive news. And even life insurance, right? The good part is in the healthcare sector, life insurance, both individual health and life, it is brought to zero from 18%, right? India is one of the under penetrated country in insurance, both in life and in health, right? This should motivate more to start taking their policies. And even the entire healthcare wise, yes, these are all your healthcare equipment related companies, right? All glucometer, corrective spectacles, thermometers, all that have been brought to a flat 5%. That's a good move, right? That's a good move. So your companies like Polymed and all of them will be benefiting, right? Will be benefiting. Right? So now the hit which government is taking is closely to the tune of around 90,000 crores hit they are going to take, right? Because just reduction of GST is almost same as cutting their revenue. The government's pocket, they are cutting their revenue to the tune of 90,000 crores. But yes, out of that, around 40,000 crores, they have increased GSTs on sinful products. So that's a half gain. But where government is focusing more is to increase the money flow, increase the consumption. So the efforts taken by government to increase the consumption theme is very good, right? Is very good. And even on the other side of it, right? Even though yesterday there was a clear statement, right? If you go through the fine script, there is a clear statement that we did not do this rate cut because of tariffs, but actually the reason is also tariffs, right? We should also thank Mr. Trump because of the tariffs. Also, government has been more aggressive in announcing these rate cuts as well. But yes, directly that's not the impact. That's not the reason for the reduction of GST. But overall, it's good for the country, for the economy, and for the market. Yes, maybe on the short term, it'll have a slight burden on the government. But maybe in a 3 years down the line, because of the consumption theme, increase in the spending, it'll be covered, right? It'll be covered. So more or less, we have seen a good move. And if you quickly go through the Nifty 50, yesterday starting we have seen a weak market, but the closing was good because of all the positive news. And let's see tomorrow, sorry, today, we also have the next, the closing day. We'll see how market will move. We are at 24,700. And even yesterday, when we have discussed also, we have discussed about the market moves. That's why you have to keep attending the live sessions to take benefit of the sectors or stocks, right? So today, let's see if the nearest psychological level of 25,000, if Nifty is able to breach, right? Or even by tomorrow, by this week, 25,000 is a very, very important resistance zone we have. Anything above 25,000 is a positive zone, right? Because we are right now close to 21-day CMA on a daily time frame, right? Once it moves above, that would be good, right? That would be good. And even we get some positive news regarding the tariffs and some more reforms are coming out that will help the market to move. That's why I've been always vocal for the last couple of weeks. We are not in a bearish market. We are in a sideways market, right? This is where it's a time correction, not the actual price correction. It is a time correction, right? Time correction. Okay. So today, let's see. Chances are very high that we will see a positive day because of this reform, because of the announcements of GST cut, which has happened yesterday, right? Which has happened yesterday. So yeah, market is open tomorrow as well, right? Market is open tomorrow as well. So Gift Nifty, if you look at it, which is the index which opens prior to Nifty 50, right? Prior to Nifty 50. So it's already up by 150 points, positive by 0.62%. So there are chances that Nifty 50 resembles Gift Nifty, right? Nifty 50 resembles Gift Nifty. So we can see a positive day or a clear gap up in Nifty 50 until and unless there is some negative news. I think we can see some good moves today, opening in Nifty 50. Okay, perfect. So thanks everyone for joining. I hope everyone loved today's discussion. We'll again catch up in our next live session. Till then, take care. Have a wonderful investing and a trading day ahead. Good day to all of you, right? Good day to all of you. Yeah. Wonderful session, sir. Thank you. Yes, sir. Love it. Thank you. Thank you. Great that I love today's discussion, sir. Thank you. Thank you. Right? Yeah. Please log out. After you, I'll close the room. Right? After you, I'll close the room. Thank you. Good day to all of you. Yeah. Thank you and namaste, sir. Thank you, sir. Namaste. Thank you, Mr. Trisanku Subadi. Thank you, Mr. Ramachandra Reddy. Wonderful. Great session, sir. Thank you, Mr.